Central Bank governor says Nigeria can't float its currency now. House of Representatives invites Minister of State NNPC on state of refineries. U.S. Treasury announces $500 million economic aid package for Ukraine, plus oil extends losses on growth concerns and Shanghai lockdown. This is Business Express coming to you on the network service of the NTA. I am Musa Abubakar. Let's begin with NNPC. Come Tuesday, 26th, the Nigerian Export Promotion Council, alongside stakeholders in the export ecosystem, will be brainstorming on ways to improve an export performance source for foreign exchange and value addition towards improving quality products as well as packaging for exports. The campaign is tagged Export for Survival.
And embark on non-oil export as a business. It is something people have been doing, people have been gaining. It is not difficult. It's a thing we can all come out and do as a nation.
Towards a seamless trade facilitation in the African continental market, the NEPC has recently opened a trade office in Egypt and is built to open another in Lomé in a fortnight. The governor of Central Bank of Nigeria, Godwin Emefiele, has explained why Nigeria cannot freely float the naira at the foreign exchange market. He said in an interview Thursday on the sidelines of the ongoing IMF World Bank Springs meetings in Washington, D.C., United States of America, that such a policy will lead to foreign exchange spiral for Nigerians.
Observe that we have adjusted the currency from about 155 to about 410, 420 that it is today. So we cannot be accused of not adjusting the currency. We are trying to adopt a very gradual approach towards adjusting the price. While you are adjusting price, you must also do something about demand and supply. And that is the reason we're saying that we need to do something on demand to make sure that those things that we can produce in the country will restrict access to foreign exchange for them, so that will encourage people to produce locally. When that happens, what it will mean is that the demand for foreign exchange will reduce, and when demand for foreign exchange reduces, ultimately you'll find that price will be better, will not rise beyond the expectation of Nigerians. And I'm saying we're achieving that. Today, we have done a lot in intervention in agriculture. Is it in rice? Is it in maize? We have stopped the import of rice. We have stopped the import of maize. With Dangote refinery coming up with the 650,000 barrels per day refinery, hopefully by around the end of the year, that will also reduce the demand for foreign exchange that normally would go for importation of petroleum products.
The Organization of the Petroleum Exporting Countries, OPEC, says global oil market fundamentals strengthened in fourth quarter 2021 and first quarter 2022 on the back of sustained global economic and oil demand growth, as well as ongoing efforts by the OPEC and non-OPEC producers participating in the declaration of cooperation to support market stability. Statement by OPEC to the International Monetary and Financial Committee meetings of ministers and governors explained that oil market conditions showed further improvements since the last meeting in October 2021, despite the outbreak of new COVID-19 strains, including Omicron. However, more recent developments related to the geopolitical developments witnessed in Eastern Europe, along with the COVID-19 pandemic, particularly in China, raised uncertainty regarding the global economic outlook. In 2022, world oil demand growth is expected to continue recovering and to increase by around 3.7 million barrels per day to average 100.5 million barrels per day. Oil demand in the Organization for Economic Cooperation and Development, OECD, is anticipated to rise by 1.9 million barrels per day. And now to capital markets. Nigerian equities sustained gains Friday to mark yet another impressive week as investors' sentiment continued to push demand for stocks, primarily the financial ones. At the end of the day's session, the all-share index climbed to 48,459.65 points. Deals recorded in the course of the day were 4,976, while volume and value settled at 342 million and 3.855 billion naira. Equity capitalization closed the week at 26.125 trillion naira. Fidelity Bank, Sovereign Insurance and Zenith Bank topped the activity chart. Now let's take a look at the global scene where Bossede Abel is standing by.
Hello and welcome to the Global Market Review. Now, earlier on Thursday, Federal Reserve Chairman Jerome Powell commented during an International Monetary Fund panel on the possibility of larger than usual rate hike next month, spoke in markets. Powell said that taming inflation is absolutely essential. However, this affected global market performance on Friday. Stock futures in the United States were lower in early trading Friday as the S&P 500 tried to avoid another losing week amid busy earnings and rising bond yields. Futures on the Dow Jones Industrial Average dipped 0.36%, S&P 500 0.37%, and Nasdaq Composite also depreciated 0.40%. European stocks fell in early trading on Friday after Federal Reserve Chairman Jerome Powell said a half percentage point rate hike is on the table for next month. DAX dipped 1.32%, FTSE 0.56%, and CAC 40 of France 1.40% across 6,620.93. Shares in Asia Pacific were mostly lower on Friday as investors watch for market reaction to comments from the Chinese Central Bank Governor Yu Geng, as well as overnight remarks from U.S. Federal Reserve Chairman Jerome Powell. Mainland Chinese stocks closed mixed, with the Shanghai Composite rising 0.23% across 3,086.92, while the Hang Seng Index dipped 0.21% at 20,638.52, and the Nikkei also depreciated 1.63% at 27,105.626. African markets were also affected by the global trends on Friday, with most stocks on the negative territory, while other markets were muted. That's the Global Market Review. I am Bossede Abel.
The first ever exchange-traded derivatives transactions in West Africa were executed on the trading platform of the Nigerian Exchange Limited recently, with the NGX Clearing Limited serving as the central counterparty to clear, settle and guarantee the trades, demonstrating commitment to providing a market that thrives on innovation and responds to the needs of stakeholders in accessing and using capital. The exchange listed NGX 30 Index Futures and NGX Pension Index Futures, with more securities to be added in the future. The NGX Chief Executive Officer Temi Popola disclosed that the exchange commenced trading activities with the first three trading license holders of Cardinal Stone Securities Limited, Meristem Securities Limited, and APT Securities and Funds Limited, who were cleared by NGX Regulation Limited to facilitate transactions on behalf of investors on NGX derivatives market. Now, so what does this development mean for the investing public, and how can Nigerians key into West Africa's first exchange-traded derivatives market? Divisional Head Capital Markets, Nigerian Exchange Limited, Mr. Jude Chiemeka is our guest on the program to respond to this and more questions. You're welcome to Business Express.
All right, good morning, and thank you so much for hosting us today.
Okay, Well, how's Lagos?
It's the usual hustle and bustle.
Okay. Okay, let's get an understanding of the recently launched West Africa's derivative market. Why now?
Thank you. So the conversation actually started 8 years ago in 2014, when under the leadership of the group CEO of the exchange, Mr. Oscar Oyema OON, and contracts in the sense that these are equity index derivatives, and they are really done on the back of two major indices that we have that we see a lot of tracking, and they're used as equity benchmarks across the industry. And these are the NGX 30 futures, as well as the NGX pension index futures. So we believe that with the launch of these contracts and the listings that we have seen, we've seen quite a bit of interest from investors who trade these indices. We have over 20 indices in the market, and this contract allows them to have a view, contrary to in the past where they have to like form a basket and they have to put up the capital for the entire basket. But now with the derivatives contract, they can have a view, because these derivative contracts do have access to margin. So the CCP allows margin into a core, and investors can have a view. And we believe that the trading that we have seen will be sustained as investors become more comfortable and begin to utilize these new contracts that we just listed.
Okay, how's the partnership with NG Clearing going to drive market participation?
Yeah, the CCP, which is really the central counterparty, provides more or less the backbone for the seamless clearing and settlement of these products. In the sense that when these contracts do mature, there has to be like a party that will ensure that the participants will get the benefits at the end of the maturity of the contract. So that's the role that they play. They will help to mitigate against any form of credit risk. They will also be involved in the regular market and ensuring that the margins provided by the participants are well aligned with the risk and the positions that they are taking. And if there's a shortfall, they will make the regular margin calls just to ensure the integrity of the system. So the CCP itself ensures that there's market integrity and ensures that the market runs in a seamless, transparent manner.
Okay, how expedient is it for the derivative market to take off now?
The derivatives market, it's really something that is long overdue in our market. So with the introduction of derivatives, we now have a complete market. So we have instruments that will allow investors to hedge their positions. And traditionally, derivatives markets are actually trading multiples of the cash equities market, because investors can now have a view, express those views, without having to commit all the capital required to express the views like we currently have in our market. Nigeria is the second largest stock market in Africa. And up until now, we didn't have a derivatives market, but you find derivatives in JSE, in Kenya, as well as in Mauritius. So being a member of the World Federation of Stock Exchanges, this really provides visibility for the Nigerian market, especially since we have an array of international investors that utilize our market. So this is a very good time to launch the product. And we believe that once investors get comfortable with the index futures, which is perhaps the safest, we can then move to more exotic side of the derivatives product, especially around single stock futures, as well as fixed income and FX related derivatives, which the market really requires at this particular time.
Okay, what's the body language of investors for the derivatives market?
The body language is positive. I mean, the conversation started 8 years ago, so we've done a lot of capacity building in the domestic environment, just leveraging all forms of partnerships that we have. There has been a lot of trainings, certifications, and so this is really an end of the circle. It's really a positive vibe. Knowing that you don't have to commit all the capital to express a view is a huge relief to investors. And also knowing that your traditional long or short positions in securities can now be mitigated by having a security or by having a product, an instrument that will allow you to hedge a view that you have as you take position. So we believe that this will help improve market liquidity in the long run and ensure that there is sustained participation even across various investment within the Nigerian capital markets.
Okay, what does this mean for the ECOWAS sub-region?
So today we're talking about integration of markets, especially the West Africa Capital Markets Integration Initiative, which allows markets to be well integrated, not just around trading, but also listing and capital formation within the West African sub-region. So this allows also an added instrument to that integration so that we have new products that can be traded. And so Nigeria setting the pace will also help across the West African region for other markets to begin to look at derivatives and adopt derivatives as a way of providing the hedge required by investors to ensure that at any point in time, positions that they take in the market are well hedged against all kinds of volatility, which is really peculiar in this particular region.
And how has it been with the reception of this derivatives in Africa?
I will say very positive. I mean, first day trading, we traded over $5,000. The market's cash equities business at the moment trades about $10-12 million a day. For a first day trading, we think it's a good initiative. We do have 2 open positions, so we'll continue working with all the major stakeholders to ensure that investors have the right knowledge to trade. We have trading license holders who have already been certified to trade this instrument, and these trading license holders, so clients who are looking to trade can trade through these certified trading license holders, which will be Cardinal Stone, Meristem, and APT. They can always reach out to ensure that accounts are opened, especially with the CCP, to make sure that they have the right margins to be able to trade. So there's a lot of positive vibe. We will continue in our part to hold webinars and increase visibility for this product and ensure that investors really understand it and how they can use it to hedge and improve the performance of their portfolios over time.
Okay. Thank you very much, Divisional Head Capital Markets, Nigerian Exchange Limited, Mr. Jude Chiemeka.
Thank you so much. It's been a pleasure.
Now moving on, the House of Representatives is seeking answers from relevant authorities on why refineries in the country have remained shut since 2019. The Port Harcourt, Warri and Kaduna refineries have since 2010 been operating at a loss, and their closure is set to be taking a toll on the economy. National Assembly correspondent Lami Ali was at the investigative hearing.
The committee is aware that the NNPC recently awarded contracts for rehabilitation of refineries in the following sums: Warri, 900 million, Port Harcourt, $1.5 billion, Kaduna, $1.3 million.
From the information available to us here, all the figures mentioned, the contracts have been awarded, a job completed in our records and in our books. But we are wondering why the refineries are not working.
And on this issue now around importation of refined petroleum products, while we have 4 refineries in the country.
Now to energy. Slipped on Friday, burdened by the prospect of weaker global growth, higher interest rates, and COVID-19 lockdowns in China, hurting demand even as the European Union considers a ban on Russian oil that will further tighten supply. The International Monetary Fund this week cuts its global economic growth focus, while the U.S. Federal Reserve Chair on Thursday said that a half-point increase to interest rates will be on the table at the next Fed policy meeting in May. Brent crude was down $1.73 to $106.60 a barrel. U.S. West Texas Intermediate crude declined $1.89 to $101.09. Now let's take a trip to the commodities market. Well, that wraps Business Express for this week. Remember to keep in touch with us by sending in your comments, observations, and suggestions. Also, be informed that all previous episodes are available on YouTube on the NTS channel. Business Express returns Monday. I am Musa Abubakar.